Hello everyone, welcome to the next video on financial statement analysis where we discuss the common size statement of profit and loss. So I hope by now the concept or idea behind the common size statement analysis is familiar to you. So we discussed the balance sheet. Today we will discuss the income statement or the statement of profit and loss. And we'll do a problem along with the interpretation and the conclusion. So before that, we'll see what is the format for the income statement. So as you have already seen the format of balance sheet, this is the format for income statement or the statement of profit and loss. First heading we have the revenue from operations, which is also known as net sales. Second head we have other income. Third head is a sum of 1 and 2. 4, we have the expenses. Under that, we have so many expenses, the cost of materials consumed, purchases of stock in trade, etc. Then we'll arrive at total expenses. 5, we have the profit before tax, that is total revenue minus total expense. 6, we have to deduct the income tax. And 7 is 5 minus 6, that is profit before tax minus income tax. We'll arrive at profit after tax. So this is the format for the statement of profit and loss. And coming to the common size statement of profit and loss, we have the absolute amount for the year. And as I said earlier, normally 1 year amount only will be given. 1 year information only will be given. And if in case 2 years are given, we'll write in this particular manner. We'll write the amount and then we'll calculate the percentage. Okay, so I hope you remember how we calculated the percentage for common size balance sheet. There, each item of the liabilities was taken and it was compared, or the ratio was taken as compared to the total of liability. That means equity share capital or the share capital divided by total liabilities into 100, or current assets divided by total of assets into 100. Here in the case of statement of profit and loss, the base will be taken as revenue from operations or net sales. So each items in the income statement can be shown as percentages of sales to show the relation of each item to sales. So a significant relationship can be established between items of the statement of profit and loss and the volume of sales. So depending upon the increase or decrease in sales, we can conclude on the selling expense, the administrative expense, or the other financial expenses. Okay, so now we'll see a problem, which is a very simple problem where we have the question as follows. From the following income statement, prepare a common size statement of profit and loss for Jayant Limited for the year ended 31st March 2011. So we have the particulars and we have the absolute amount of just 1 year. So it's very easy. We have to calculate for 2011 only. We have revenue from operations 25,38,000. Other incomes, we have the total of income. Then we have the expenses such as cost of revenue from operations, that is the cost of goods sold, and we have the operating expenses. Then we will arrive at the total of expense. Then profit before tax is calculated by total income minus total expense. Then we have income tax and we have the profit after tax. So now we will see how we will prepare the statement of profit and loss common size. Okay. So here we have the common size statement of profit and loss for Jayant Limited for the year ended 31st March 2011. So we'll go as per the format. So as per the format, first item that we have is revenue from operations or net sales. Okay, revenue from operations or net sales. So from the question, it is given 25,38,000. So we write the amount here, and what is the percentage? The percentage is taken of the sales. So 25,38,000 divided by 25,38,000 into 100. We'll get the percentage as 100%. Okay. Then As per the format, the second head is other income. Other income category, we have an amount of 38,000. So 38,000 is the amount of other income. Then now we'll calculate the percentage. 38,000 divided by 25 lakh 38,000 into 100. So we'll get the percentages 1.497, which we will round to 1.5. Okay. Then the third head is total revenue. That is 1 plus 2. We have the total of revenue as 25 lakh 76,000, and that also we have to calculate the ratio. So what will be the ratio? 25 lakh 76,000 divided by 25 lakh 38,000 into 100. So 101.5 percentage is the ratio. Okay. Then we come to expenses. We have a cost of revenue from operations and operating expenses. Each item we will write one by one, and first we will find the percentage for cost of revenue from operations. So it is 14 lakh. So we will have the percentages 14 lakh divided by 25 lakh 38,000 into 100. So we will have the percentages 55.16. In case of operating expense also, 5 lakh divided by 25 lakh 38,000 into 100. That is 19.70. And we have the total expenses. Total expense divided by revenue from operations into 100, we will get 74.86. Okay. Now we have profit before tax, that is 3 minus 4. That is 6,76,000. That also should be taken as a ratio of sales. 6,76,000 divided by 25,38,000 into 100. Same as that of same as with tax and profit after tax. So this is the way where we do the common size statement of profit and loss. So now we'll see how do we interpret this particular statement. See, each and every item in this statement is given or is calculated as a ratio of sales or revenue from operations. So see the first item, that means the other income category. So in this particular company Giant Limited, the other incomes only constitute 1.5 percentage of the total sales. Only 1.5 percentage of the total sales comprises of other income. Okay. Then we'll come to the expense side. So we'll mainly concentrate on the income side and the expense side. So in coming to expenses, 55.16 percentage of total sales comprises of cost of revenue from operations or the cost of goods sold. Okay. And 19.70 percentage of total sales includes the operating expenses carried out by or incurred by the Giant Limited. Okay. So comparing with the sales, 26.64 percentage of sales we get the profit before tax, and after tax the profit will be reduced to 13.32 percentage of sales. Okay. Now we'll see how it can be interpreted more accurately. So let's say if there is an increase in sales, it will certainly increase the selling expenses and not the administrative or financial expenses. And if the volume of sales increases to a considerable extent, then the administrative and financial expenses also may go up. Then in case the sales are declining, the selling expenses should be reduced at once. Okay. So depending upon, so since we have only 1 year given here, that is 2011 only, we cannot predict or we cannot see if there is an increase in sales or if there is a decrease in sales. So if 2 years are given, depending upon the increase and decrease in sales, we can comment upon the selling expenses. What should be done with the selling expense or what should be done with the administrative and financial expenses. Okay. So a relationship is established between sales and the other items in the statement of profit and loss, and this relationship is very helpful in evaluating the operational activities of the enterprise. Okay, so hope you got an idea about how to prepare the common sense statement and also how to interpret after the preparation. In the next video, we'll see or discuss a very new topic which is known as trend analysis or trend percentage analysis. Thank you.